Okay, in this next video today, we're going to be adding more to SLG Realty. It's a real estate company that owns the skyscrapers in New York. What better properties to have than some of the most beautiful buildings in the world and the most iconic city in the world? So as you see here, SLG, we're down 2% in our overall cost position, and it's down 2% today. And I want to use the weakness to add to our position and increase our monthly income. So it pays a 7.77 dividend monthly, and it's had a pretty good rally off of the lows. So we're only going to add $200 to it because our position size is $1,600. And while this is a top quality REIT, we don't want to put too much in stocks, buy five, place. We only buy stocks so that we don't get the fear of missing out, issue. And a lot of our real estate is in raw. So we have a good amount of real estate in raw. But sometimes you have stocks that you don't want FOMO with. And again, these are sexy, attractive assets, being the most iconic skyscrapers in New York and in the world, quite frankly. So that put our position up to 2,000. We don't want any more than 1 to 2,000 in a stock because anything could happen with a stock. We also didn't want to raise our margin interest much. SLG has a lot of debt, and we have debt too. And it looks like SLG is covering their debt. They have a 91% same store occupancy, which is pretty good. It fell from the third quarter, but they did cut their dividend recently, which gives them actually a lot of headroom, to have new development plans and still pay out the dividend. So that's what I liked about SLG. The thing is with SLG, we're, again, playing it with only $2,000. So it doesn't matter what happens in it. We're just playing the cash flow game. 7% a year times 10 years will make it, frankly, 13 years. Then you're paid back. It's better than a mortgage, a 15-year mortgage where you have to wait 15 or 30 years for your payback. This one should pay you back in less than 15 years, and it is real estate. So we add to that. Very simple. We just made a video on QYLD earlier today, tech fund. You go check that out if you're into tech. But if you want to play real estate, what better way than SLG and raw? But we'll do another video on raw. That has a collection of other real estate assets. It's a basket. It's a safer way to play real estate and put more money in real estate buy. You do it through a diversified ETF rather than one stock that could blow up on you overnight. But again, we like the stock, we like the dividend, we just don't want to put too much in it. So that's what we did. We added a couple hundred to it. We put our big money in these index funds because those are what are more predictable than real estate. But you got to have some real estate, and you want to have some exciting things to keep you going every day in the market. So that's what we did with SLG. And on any further weakness, we'll add to it. It's still way off of the highs. And yes, again, it's had a monster run from the lows, but it was at 80. So we still have a double at hand. If we can just get back to it used to trade at near 100. So if we can just get back to 80, we get a double in our position, plus we collect that dividend monthly. And hopefully you hold it forever so that this is just a continual cash flow machine for you. So I hope you like that video. Yes, we're down 2,000 now, which looks like a lot of money, but when the market, we're only down 0.31, and it's in line with the Dow, which is 0.27, down 0.27. So it looks like a lot of money where we're playing with big scale when you have 411,000 net account value and 200,000 in debt. One more thing before we go, look at our performance and value. We've been beating the market handily this year. 29% we're up over the NASDAQ and S&P. We're up twice the NASDAQ and up 3 times, almost 4 times the S&P. And we earn about $95,000 in dividends per year, paid monthly through these funds that I've described to you, like Raw and Cornerstone, and through these stocks that I just added to, like SLG, which pays $12. We're talking nothing here. I get paid nothing off that. But it's a way to play the stock and get that 100% gain potential because it was at 80. So I'm playing it for gain potential and just income. Wherever I can get income that's over my margin rate of 5%, I'm going to do it. So it pays me 2% more than my margin rate to take this bet on. Plus, it's top quality. It deserves a place in your portfolio because it's real estate. You have to have this asset. We just don't put too much in it, once again, because it's a stock and not a fund. You can put all your money in a fund and feel a little bit better about things rather than being in a stock. So yes, now we're down $3,000. Ooh, big deal. We don't care. We're down 0.47 is what we care about. 0.47. Is that in line with the market? Yes. We're beating the market. Dow's down 0.5, NASDAQ 0.6, S&P 0.6. So we're actually still beating the market, even though we're down 3,000. We made 15,000 in one day on Friday, and all last week about 50 grand. So this is healthy. This is expected. The market's gotten above the 200-day moving average, and we've broken out, and things are off to the races, and we had a healthy pullback today. So now I'm adding. See my past videos on the market breaking out past the 200 and how I've been pounding the table on buying these funds. Anyway, so I hope you liked the video. We added to SLG, not too much. Our big focus is in these funds. This is where we make the most money. Our performance shows, our estimated income shows, it proves this point. So stay tuned for more updates as we're going to take whatever the market gives us and act accordingly. Thanks.